Welcome to Wyckoff TV. My name is Jim O'Brien. Today I'm going to present a wonderful Wyckoff strategy that leads Wyckoff investors and traders to strong profits in a relatively short period of time. An important Wyckoff indicator is called ending action. Ending action occurs at the end of periods of accumulation or distribution. The most common forms of ending action are a spring after accumulation and an upthrust after distribution. This video analyzes a spring. During the video, I will describe how a spring works and share some ideas about how the Wyckoff strategies and techniques can help a trader take a position just as the stock is getting ready to rally. The process of accumulation is the transfer of shares of stock from weak into strong hands. In other words, the professionals have taken an interest in the stock and are setting it up for a nice rally. As the stock moves sideways, weaker hands tire of the lack of action and liquidate their holdings to look for better opportunities. Just before the ending action, a stock will usually react sharply and drive the remaining weak holders out of the market. This coup de grace is the final move below the support line at the bottom of the trading range. Then, all of a sudden, strong demand comes into the market as the rally begins. The stock will rally quickly and reward the professionals with some nice profits. This is exactly what happened with Garmin, a multinational technology company that produces GPS navigational devices. Let's look at Garmin's vertical line chart. It provides an excellent example of ending action with a spring and a strong move to the upside. In October 2015, after a decent reaction, Garmin went through a selling climax at point A. This was the first step in driving weak holders out of the stock. There was a quick automatic rally to point B and a secondary test of the selling climax at point C. Then, Garmin established a trading range and moved sideways for about 3 months. The top of the trading range is marked by a green resistance line drawn through points D, F, and H. The bottom is marked by a green support line drawn from the selling climax at point A. Garmin moved sideways in a fairly tight trading range. It met support at points E and G and then rallied to point H. Then, Garmin began a relatively sharp decline all the way down to point I. This got the public's attention as they liquidated their stock. Notice that Garmin has reacted below the support line at point I. This was the spring. It is called a spring because as a stock moves below a support line and demand comes into the stock, just like it did here, the stock springs up and rallies. Notice that how at point I and the day after point I, Garmin experienced wide price spread and good volume to the upside. This is evidence of strong demand. Garmin rallied to point J, moved sideways, and reacted to point K. Notice that point K held above point I. This is a successful test of the spring. Then, more demand came into the market, and Garmin rallied strongly through the trading range to point L, reacted to point M, and rallied to point N. This market action involves several Wyckoff indicators that will be discussed in other videos. One important Wyckoff tool is the point and figure chart. Wyckoff teaches that before any rally can begin, there must be a base or foundation to support that rally. For Garmin, that was the accumulation that began with the selling climax at point A. The size of the base is seen on the point and figure chart. The wider the base, the greater the upside potential. Let's look at Garmin's point and figure chart. The selling climax is also marked by point A and the spring at point I. The width of the foundation, or base, is marked by a red box that runs from the secondary test at point K over to the selling climax. There is a count of 13 points. This gives Garmin an upside objective of between $44 and $44 per share. In late April 2015, at point N, Garmin encountered some supply. It had reached its first point and figure chart objective and profits could be taken. Wyckoff traders who bought on the spring saw a 40% gain in just over 3 months. Those who bought on the secondary test enjoyed a 26% gain in just under 2.5 months. A spring is just one of many Wyckoff strategies that can help Wyckoff students improve their stock market trading skills. You can learn more about these profit-making strategies by reading our Wyckoff ebook called Wyckoff Strategies and Techniques. Both the ebook and an audio recording of the book with its own set of charts are included. Learn more about how to make money using the time-proven Wyckoff strategies and techniques by clicking the link below.